Hello traders, Gary Wagner here for Trending Markets just before 11:30 in Honolulu, 5:30 in New York. The Dow Jones Industrial Average, the equities markets have closed for the day. It is Tuesday, September the 8th, and we're looking at almost a 400-point gain once again in the S&Ps. Now, in the Dow Jones Industrial Average. Now, the interesting thing is that even though this market is trading much higher, we can see that we've got real support here in the Dow Jones at about 16,000 and at about 16,500 to 16,600. This area here, we have a little bit of resistance. We have been trading in a fairly narrow range in which we have seen dramatic sell-offs in the market accompanied by strong rallies to the upside. So we're moving back and forth, but it seems as though it's kind of as though we're running in place. We're not really making any kind of headway in terms of breaking above the most recent highs being right here, or the most recent lows. And of course, the way I'm looking at the lows is you've got the dramatic low, of course, down here, but really these lows here that are roughly at 15,600, somewhere in that area, 15,700 in that area. So the other thing that I am noticing is that we are getting a consolidation of range. We're going to have to see how this weathers out. But the interesting thing is that we talked about the fact that typically when we have seen this kind of a candlestick on our weekly candle, which is this extended hammer candle, we've gotten that here, we've gotten that here, here, and here. On each occasion, we have seen this market track higher. However, there's one key, really, really big difference on this particular move. And the difference is that when you look at the following week, the week following that hammer, you had a dramatic surge up, such as here. Here's another case of that hammer, such as here. Even the smaller hammer here, you got a green candle following that sell-off. Now, we cannot say the same is true for this particular instance, and that is what, on a technical basis, is kind of baffling me. The following week, we had a dramatic sell-off, and now, of course, this is just today's activity on a weekly chart. Look at the kind of ground that we have covered in just one day. So when we look at it in that way, we can only say that we've got to be a little bit more certain, because I do want to take a stab at this market from the long side because of this historical data and because of the way that this particular formation has really highlighted on multiple occasions that we would be looking at a higher price. Right now, we do have this key difference. And of course, as I said, that key difference is the fact that the following week was red, or a lower trading market. The other market that we are watching very closely, I do believe that we will see lower pricing in crude, but today it is down, but it's only down almost 0.75% off about 32 cents. After the kinds of moves we have seen in this market, this is a very, very light move, to say the least. Now, the same can be said for the dollar. Dollar is trading off, but again, it's only off about 1/3 of a point. Now, as the fact comes in that summer is over, traders are back, let's give it a couple of days to see where the momentum builds, because I think we'll have a great opportunity in the equities markets if we can see follow through, and we've actually had a key reversal. That correction is over. And I definitely think a strong play is going to be in the crude oil market, because on a fundamental basis, I see that market is going to track lower. This has been Gary Wagner for Trending Markets. We will talk to you tomorrow for another daily update and review. Bye-bye.